Hello and welcome to BloombergQuint. You're joining us on this special conversation with Mr. Rajnish Kumar, the former chairman of State Bank of India, who's just recently come out with a new book, The Custodian of Trust, published by Random House Penguin. Sir, Mr. Kumar, thank you so much for joining us on this conversation. I have gone through the book over the last couple of days, and a bunch of stories out there that you've put out. Of course, you've discussed a lot about your 3-year tenure at State Bank of India, as leading State Bank of India, as well as the various challenges that you faced. To begin with, sir, I know there's a lot of talk going on about what happened at Yes Bank and what happened at Jet Airways and the stories that you have told us. But I want to move a little bit away from that and go to the merger side of the story. The 5 associate banks and Mahila Bank, which merged with State Bank of India. I want to get a sense from you, the major challenges. Of course, you've discussed all of this in the book, especially with respect to State Bank of Travancore and the political challenges that came with it. But if you can just tell us briefly, what were those challenges that came in front of you during your tenure at the bank, and how exactly were these dealt with?
You asked a good question about the merger of the banks, and I'm not aware of any other example where 6 banks got merged in such a short period of time.
Yeah.
Associate banks, one advantage, of course, I can say was that the technology platform was the same, and there were version upgrades differences. The State Bank would have installed the latest versions, and then it takes time for the same version to be upgraded at the other banks. And the rationale for existence of the associate banks had almost disappeared over a period of time. Because one, they were mostly regional.
Yeah.
Number two, for any business on the deposit side, if they have to take the deposits, they have to pay higher rate of interest. Then if you're paying depositors higher rate of interest, obviously you need to earn more on your loans, and then maybe somewhere the guard against the risk, the losses which can arise out of that risk. So that gets lower. So there were a couple of issues, and then banks' inability, the state bank's inability to keep on providing the capital. So the environment was perfect, and many times these are calls which are also political in nature. So obviously, as far as the political backing is concerned for the move, so it was very much there, and that's why when the merger happens, obviously it is a merger of processes, technology. But the most difficult part always is the merger of the manpower or the cultures. Most of the mergers have failed because of the incapability to integrate the two organizations at the people's level. In the State Bank of India, this is the aspect which we took special care. And that's why people didn't feel that merger as it was a very sort of a seamless affair for the customers, for the staff, and for everyone. It's a lot of hard work. There's no doubt about it. A lot of preparation went into it, and I've written in my book that in a way, demonetization came as some sort of a blessing in disguise also.
Absolutely.
Because it gave more time for preparation, and then on 1st April, the merger process was carried out.
So after State Bank of India completed this 6-bank merger, there were a few others that followed you. First with Bank of Baroda, and then later with a bunch of, I think 10 public sector banks were merged into 4. You've had some amount of success after the initial teething issues in the first couple of years, but then after that, the systems have stabilized, and of course, the book is where it is now. But with respect to these other banks, and now that we're talking about some amount of consolidation in the remaining public sector banks as well, Where do you see this heading in terms of the banking system? Are we capable of creating these larger institutions? As the finance minister said multiple times, we need 4 or 5 SBIs in India. And that's the only way that we can be competitive globally. But are we capable of creating these large institutions, sir?
I don't see now that there would be any more mergers. There is privatization of a couple of banks, which is on the agenda of the government. Announcements have already been made. Lack of scale for the banks in India, that has always been an issue. And if you look at the scale, it is only State Bank of India which commands some global respect and global presence. So there is a need for bigger institutions. But is merger the best way to achieve that? That is something where maybe it requires more debate. Today, if you want to create a State Bank of India, for example, you will have to merge 3 next largest public sector banks to make one state bank. So that means you merge PNB, Bank of Baroda, maybe Union Bank.
Yeah.
And then you may get a State Bank of India, or maybe that entity would still be smaller than the State Bank of India. So now I believe that the growth will come organically and not inorganically. Second is that after 2008, Lehman Brothers, the trend is that big is not necessarily beautiful. What matters most, or would matter most, is the operational efficiency, the adoption of technology, and the capability to take a view of the things which are futuristic. There is one big gap at the moment, and that is around infrastructure financing. So that is one gap where we need an institution which can channelize the funds and help in funding the infrastructure. Rest, I think, size to my mind now is not so relevant, rather than the efficiency of the scale, not efficiency of the scale, efficiency of operations, profitability, technology adoption, capability to bring out to new products, new services, which are technology enabled. So there are many issues which need to be taken care of. And size, I believe, will come as the economy of the India grows. Today we are, I am leaving aside the COVID impact, but almost a 3 trillion economy, and which is positioned to be 5 trillion economy, 5 years or 6 years. So obviously, as the economy grows, banking system will. And that is how the roadmap has to.
Okay. I'm glad you brought up privatization and then infrastructure. So I'll take those two questions separately. Firstly, on the privatization front, now there is already talk of, IDPI privatization has been going on for a while. There's 2 more public sector banks which are to be privatized. We still don't know who these banks are. But is this the fear that most people have is that when you go for privatization, you lose out that whole public sector flavor of the bank. I mean, these institutions have been around for nearly a century with that essential public sector identity, and then you suddenly become a private bank, then you're not entirely sure who you are. How do you deal with these problems, sir?
Public sector banks, I think one is that this 2021 and 1969.
Yeah.
So we are in different eras. And second is, I have always said that ownership should not matter. Ownership should not matter. It's all about the governance and what you do. So even say, without diluting the shareholding or diluting the shareholding to some extent, even the existing governance structure at the public sector banks can be improved. I don't think it is written in the act that there would be a department of financial services. For example, it is just an example.
Sure.
So a public sector bank can be managed by its board and can be regulated by Reserve Bank of India, as is being done for all the other banks.
Correct.
Government as a shareholder, it can be as proactive as the shareholders of private sector banks are.
Absolutely. Absolutely.
So, you have all sorts of shareholders in private sector banks, and the management of these banks is responsible to deliver to the shareholders. They are accountable. So it is not that accountability comes only when you have a direct control. It doesn't. Accountability can still be, accountability to shareholders is always there. And the management has to meet and deliver according to the expectations. So, but when we say privatization, right now, of course, it is that the act would be amended and then government would bring down the shareholding. So I believe that this State Bank of India and 5 other major banks, they are in fact currently 6 if you take Central Bank and Bank of India, the 4 other banks where mergers took place, and 4 some sort of regional banks. So the privatization of these smaller banks, that can happen. And parallelly, if really we want to improve the efficiency of the banking system and make it more modern, I think a serious look is required at the way they are being governed currently.
Okay. Let me come to the infra question now. So in the book, you've dedicated significant part discussing the various government policies, the idea of always blaming the bankers because the last infrastructure cycle sort of led to a lot of pain later on, as well as promoters and their role in the issues that came up in the last NPA cycle. What I'm trying to understand is now we are stabilizing, the COVID fears a little bit receding. The expectation is, and with the government's multiple infra-related announcements, the expectation is now that cycle is going to start again. Are we ready to avoid the pitfalls? Is the system, the policy, the regulation, is all of this geared toward a you can't call it risk-free, it can never be risk-free, but low risk sort of a situation?
There is still no low risk situation, because if you look at sector by sector, the power sector is beset with a lot of problems, even now.
Yeah.
And government effort is there to reform the distribution. Power sector will not become relatively risk-free. You use the word, there can be nothing, can be risk-free till such time distribution sector reforms takes place. You improve the health of the distribution companies, only then the investment in the power sector will be safe. Otherwise, it is all very risky, because the recoveries, there are under recoveries and don't meet the cost of generation, transmission, and the what you call ATC losses. So there is not enough recovery from the consumers. So there's a big hole there. And we have had several schemes, several Uday schemes, and we are still back to square. Every 4 years we find that we are in the similar situation where we were. So the crux of power sector reforms lies in improving the health of the distribution company. So that is what. Road sector, initially, yes, there were a lot of problems. So what happened in BOT then is not happening in the road sector.
Right.
So it is an HAI, either through they build the road or HAM projects, where there is a hybrid annuity model. So at least the risk is on the books of NHAI. So that is a one big factor which is de-risking the road sector. I don't just foresee where there will be revival of the projects. So the partnership around where NHAI also is a party to the risk, and it is a good model. Otherwise, if NHAI does not have any financial risk, so there we have seen in the past the impact of that. And
yeah,
there were a lot of NPAs. But there is still there is no satisfactory mechanism where the dispute resolution between NHAI and the contractors, the issues can be resolved quickly. They go into arbitration, and arbitration, if it is against NHAI, or they're saying that the matter goes ultimately to the Supreme Court. And a lot of time is wasted. So the contracts, whether they need to be restructured or rewritten, but this situation is not a very happy situation where there is always a litigation between NHAI and the contractor. So that risk still remains when you're financing. But as I said, that hybrid annuity model has been successful. And the other is you construct the road, you put the toll in place and securitize the toll. So there is a huge demand for that. And InvITs in the road sector, they have been successfully launched and investment has taken place. So post-construction of the road, it is easier to securitize the toll or the receivables. So the model which would emerge is that NHAI first, they take the risk of getting the road completed. But once it is complete, then the investors would be willing to assess the risk of the whatever are the projected cash flows, apply a discount rate and arrive at the net present value, and you can finance.
Okay.
Now, railways, I don't have much hope.
I'm sorry.
PPP. Railways, I don't have much hope on PPP model. Not much progress has been made.
Yeah, there's a bit of criticism of the PPP model in your book as well. I mean, you picked up sectors specifically and then talked about how the PPP model has worked in those. My question was also with respect to the financing of these projects. Now, there was a time when India had DFIs, and then with IDBI and ICICI coming out of the DFI model and entering the universal bank model, that segment more or less died. Now we're talking about a new DFI that the government is introducing. Do you think that that there is a successful DFI model that can be implemented in India for these projects, so that all the burden of financing these projects doesn't fall on banks at the end?
As I said, that if DFI also has to face the same ecosystem and same issues, then there would be a problem. But at least again, DFI can help in channelizing the completed projects take over from the existing lines. So that would be one. The ideal model would be that the risk is very properly assessed, and the commercial banks, they do the funding only up to the construction stage and then don't hold the book in there. The problem in this model arises that the people are not willing to pay the risk premium for the construction period. That is the problem. And then banks become reluctant to part with a completed project because now it has been largely de-risked.
Right. So there's nothing to earn from it. Yeah.
Yeah. So for even DFI to be successful, one, because initially it is proposed to be sovereign, so their capability to raise the low-cost funding, including multilateral institutions, will be much better than any other commercial bank. So that is one. Second is the reforms in power sector, the road sector, whatever issues are plaguing the existing financing, those issues still will need to be taken care of. But still, we need an institution which builds and expertise in risk assessment and risk mitigation.
Right.
And lead the consortium. Right now, that mantle is on the State Bank of India. Any large project, if there has to be financial closure, without the State Bank of India, it is not possible. So in a way, SBI is doing that role, but maybe that role needs to shift to a specialized institution, which will have more stability. State Bank of India, we have our own problem of moving people quickly. In 3 years, they have to be changed. I hope that DFI will not be set with those kind of manpower issues. And then the way legislation has been drafted, there's a lot of freedom which is proposed to be given to DFI in terms of decision making and the protection which is proposed to be made available for the decision maker. So there are some distribution features, and I think it will be good for the country if a high quality institution can be recreated.
Right. Um, Now, you earlier mentioned that with respect to banks, ownership should not be an issue. I mean, it should essentially be what is the bank capable of, how good the governance standards are, and the business that is chasing. I buy that completely. But there is, of course, the event of Yes Bank, which you have, very in details spoken about. There, the ownership did matter. I mean, at the end of it, that is probably why the bank took the direction it did, and then eventually had to be rescued by some of the more larger names in the market, uh, especially led by State Bank of India. Uh, what in terms of the learnings from events like Yes Bank or events like Jet Airways? Now, I don't know if I should call them black swan events, because it's not like, it's not like a once in a while. Multiple banks and multiple large NBFCs have failed, and people have lost money, especially in the NBFC segment. What do we learn as a system from this, and how exactly do you build the right kind of mechanisms to prevent it?
So there are two things. One is, of course, the tighter supervision, which Reserve Bank of India has been doing. So in 4 years, 5 years, I've seen, 3 years, of course, I was chairman also, that the supervision is much more tighter now by Reserve Bank of India. So supervision is the one thing where we cannot, lower the guard at all. And at the early signs of trouble itself, the RBI should have the capability to take the corrective action and not delay. So that is one thing. Second is, I believe that there is a need that we put in the framework for resolution for financial firms. That legislation is still pending. And today, what happens if their bank is trouble or NBFC is trouble? It is the responsibility which is on Reserve Bank of India then to find a solution. In my book, also, I have mentioned that the approach has been different in each case. In Yes Bank, it was different. In ILFS, it is different. In AMC Bank, it is different. So we can't have a situation where each situation is different. You will argue it's different, so you apply a different solution, but that's not my point. The point is a legislative framework for resolution of stressed financial firms and banks. It is needed. And that the authority which will be responsible for resolution, a fully empowered authority with the same mindset of capability to resolve assets, find solutions. We need people like that, a dedicated team, because we are a very big system. We have cooperative banks, we have NBFCs, we have banks, we have well-managed banks, we have not so well-managed banks, and that situation will not disappear, whatever you do. So time to time, there will be events. We cannot wish those away. So these two things, in my view, are very, very essential. Have a proper resolution framework and have a proper, the resolution framework itself will have an authority who will have all the powers to resolve when a firm is in distress.
Right. Let me come to some of the specifics here, because there were certain instances where you had to use not only your position as the SBI chairman and thereby, the de facto leader in a lot of these problems, but also use a little bit of your banker's ingenuity to get out of, sticky situations. You mentioned in your book about two situations in SR Steel. One where you said that I'm looking at the sky every day and praying that the solution comes soon. That was aimed at the courts, as you mentioned. And then later on, when you said that you're going to sell SRC loans at a discount, and that sort of, propelled the system to move quicker. Similarly, with Yes Bank, where there was a point where SBI had to lead the whole situation on its own, and then you had to ensure that that doesn't happen. Everything doesn't end up on SBI's shoulders, as always. What does this say about the system, that with SBI's position in the banking system, that every time there something goes wrong, and every time there's a big hole that emerges in these problems, and then you have to rush to rescue the system from it? What does it say about the system's strength as well?
That's what I am pointing out, that the SBI one, because of its size and the respect which it commands in the country as a financial institution, uh, that is always helpful in the sense that when SBI chairman says something, uh, it matters. But we have to be very careful what we say. So that is also when you are in such a position that every word matters, and one has to be very, very careful when saying something. But it's all about, like SR Steel, it was a frustration because the matter was not moving at all in NCLT.
Mm.
There was no sense of urgency, and it was just held up, not being even come up for hearing. So that was just out of sheer frustration, I would say. And Yes Bank, with the imposition of the moratorium, then there was a genuine fear that there could be a run of the bank. And then SBI alone would have not been able to, if there was a run of the bank, then obviously SBI alone cannot help. And that is where I think it is a situation like this, that if the rivers are swollen and you construct a dam, and then if there's a breach, then if you put a very few sandbanks, it will not help.
Not gonna help, yeah.
So it was a similar situation, identical situation, but then there were players like SBI and Kotak Mahindra Bank and ICICI Access, HDFC Bank. So what happens then, collectively you feel very strong to deal with this situation, and then help coming from RBI.
Correct.
So we were ready with a large chunk of cash, that even if there are heavy withdrawals and there is enough money sitting to take care, even if half of the deposits is gone. So that is it's a very sort of, I think, this experience and this learning is also a lifetime experience and learning. And such opportunities don't arise every day. And I wish they don't arise at all.
This concept of moratorium, this has been criticized in a lot of places, as to why exactly can people not access their money. We're not entirely sure. I mean, probably if that didn't exist, I wouldn't be that worried as I was when the moratorium came in. Maybe is there a reason to rethink that from a regulatory perspective?
Yes, it was a regulatory requirement. Otherwise, a bank cannot be reconstructed. And I think later on, but I have to recheck, there have been some amendments in the Banking Regulation Act. And not now, maybe the moratorium may not be necessary, but ultimately you still have to,
I mean, the Lakshmi Vilas Bank solution, which happened after Yes Bank, had the same issue.
But I think this one, raising the limit to 5 lakh,
right,
and at least up to 5 lakh people will be able to withdraw. Yeah. In this revised change scenario, and based on the learning from Yes Bank, I think there is some amendment in the Banking Regulation Act also. Otherwise, at that when Yes Bank situation was, without imposing a moratorium, RBI could have not proceeded under the Banking Regulation.
Yeah. You also have a few other words with respect to RBI's, handling of these crisis situations. You've given some advice to the regulators to, how you can look at these things, including the way you look at bank licenses, because it's not like, the RBI's checks and balances that it puts in place before handing a bank license to someone, that it has worked completely well. In the last 20 years alone, we've seen multiple banks fail or get merged with others because of ownership problems. What exactly is the RBI missing in its approach right
now? I would say that RBI is missing anything. They're a very, I would say, highly respected regulator, Reserve Bank of India. 2008 particularly, their prestige went up many notches across the world. They protected the Indian banking system. But one is that the system has become bigger, and the complexities for RBI has also grown. Because of now they have to supervise the entire banking system, they have to supervise NBFCs, they have to supervise cooperative banks.
Yeah.
So their plate is full. So they are taking a lot of steps. As a chairman of SBI, I feel that what action is being taken.
Yeah.
But licensing policy is something which not clear that on what basis licenses are being given. So even these two licenses, I have nothing against Bandhan Bank or IDFC First getting license, but it was a complete surprise to the market when these licenses were given.
Yeah.
So hopefully the latest discussion paper, and now we are expecting that a final licensing policy will come, and then there is a committee, I think now,
Yes,
of
that's right.
people who will be vetting the licenses. So maybe now we will have much more clarity, transparency, rational, that why license is being given to a particular entity and on what basis. Well, it was just a striking, the thing came out to me, that in 2004 we had a failed bank of Ramesh Jelly. You know, in the same year, you give a license to Raman Kapoor, which fails out 17 years. It's just a pure coincidence. But it's a strange coincidence.
That is true. Are you in favor of allowing these industrialists to enter the system? Because that's
India is ready for that. We know how the systems work in India. It is huge risk in my view. And imagine many of the people who have defaulted, owning a bank. Where would we be? But when they would be, say, 15 years ago, many of these people, when they were on the top of the situation, who could have denied license to?
Absolutely. Yeah.
So how do you deal with the situation like this? So personally, I feel India is not ready as a country with all our whatever the systems are. And today you may have a very strong government which doesn't get influenced. But what is the guarantee that you will always have a very strong government which cannot influence?
Yeah.
No guarantee. So we cannot be carried away that yes, we have a strong government which cannot be influenced, will not be influenced, will not give license. But the situation may not remain forever like this.
That's true. That is true. Coming to the question of UNO, now there again, we have spent considerable time talking about it, because from what I gathered, at least by reading the book, was that it was a project really close to your heart, and you really wanted it to become the trendsetter as far as digital banking is concerned. I wanted to understand what you saw as an opportunity there. Initially you said in the book that initially when UNO was introduced, it was just a way of allowing customers, yes. But then obviously the use cases.
You already had a and it was doing quite well.
Yes.
The existing.
What did you see as an opportunity there?
No, the opportunity I saw that we were having scattered applications, and when the discussion was moving. So my point was, new to bank customers are important, and online marketplace would be a good hope. But what about the existing 40 crore customers? And then we have plethora of mobile banking applications, SBI, and for everything there was a mobile application. So what is needed is that all applications in one platform, and that's how this concept of you only need one. It evolved. And since then, a lot has happened, but everybody today is talking about super applications. But SBI has taken, I would say they have already taken a lead of 4 or 5 years as far as the super app is concerned. Today, the kind of things you can do on UNO, it is amazing. And it will take time for anybody else to build an application like that. We have spent, State Bank has spent 4 or 5 years. Building this and development work is still going. So it's today a real super app as far as the banks are concerned.
All right. Lastly, what I wanted to understand from you is your journey now. Now that you've it's been around a little over a year now since you retired from State Bank. You're taking up new assignments. Took a role at Bharat Pay. You're advising Kotak's stressed asset fund. Where does a banker at the top of his game, once he is retired, where does he go? What does he do? If you can just tell us a little bit.
There can be multiple things. So it has to be a mix of work and pleasure. Because when you're in a state bank or any large organization, there's hardly any time left for your personal.
Yes.
It's a busy thing, a busy schedule. Of course, when you retire, suddenly you feel there's a gap. You have to fill that gap. And it is an individual choice. There is no uniform formula for how will you lead your life after you have retired. Retired is not the right word. You have completed one assignment. It was a 40-year assignment. You have completed it, then you move. And the quality of work you do, that is very material. And second is there should be enough time for your leisure and your whatever your personal hobbies or interests are. You watch movies, you travel, you play sports. So there should be enough time for that. And at the same time, you should be working. And right now, my intended focus is that whatever assignments I've accepted. But mostly the startups and fintechs in the country, they need guidance. They're brilliant people. And there's a lot of energy with which all these people are working, which is a very positive sign for India and the Indian economy. So I'm quite excited about what they are doing. And like you have in the family where young people need guidance of,
yes, for sure. but is the aim to bring them closer to the ground and not let them get caught up in this valuation game?
No. Then you will not be a popular person. So it is about like what they are doing. So time to time, or when they grow beyond a point, then it becomes a necessity that the processes and governance put in. So it's a very delicate task where you don't cap the energy, enthusiasm for innovation. The only thing is that particularly if you're in a financial services or a fintech, you have to at all stages ensure that you are on the right side of the law and regulation. So that is where experience can come in. But let them do whatever they want to do, because there are a lot of ideas, and that energy has to be harnessed. Those ideas have to be built upon. But sometimes experience can say if you do this way or that way. So you can be part of that discussion.
Yeah.
And,
so this adage of experience comes in the way of innovation. Does that?
But experience should not be like, you cannot go with the mindset of State Bank things would be done very differently. We have still produced YONO, but the way we have produced or created YONO, the process by State Bank standards was a very different process. That again I have covered in the chapter on YONO. First time we introduced the concept of garage. Garage was always for repair of motor car industry. So that is a change which even a legacy bank can do. And for the fintechs, startups, they're starting on the clean slate. So their design elements and principles would be different because they're thinking different. And that is where they have some advantage over the legacy institutions and banks. So whenever in whatever role I am, either as a board member or a mentor or an advisor, I will be at least trying to ensure that I don't advise them anything where their capability to innovate gets compromised, because that is their strength.
Right. Thank you so much, Mr. Kumar, for joining us on this conversation and taking us through some of your ideas. Of course, this book is a great read for anybody who's wanting to understand what exactly happened in the last 3 or 4 years in the banking system, because so much has changed, not just for the good, but some of it was a little worrying as well. But thank you so much for sharing your experiences with us, and I hope we continue to hear from you, sir. Thank you so much, and
Thank
thank you so much
you.
for watching.
Always a pleasure talking to you.